What is going on, everybody? Welcome into another edition of the Daily Energy Newsbeat Stand-Up here on this gorgeous Monday, March 6, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsbeat.com, Stuart Turley. My man, how we doing today?
It's a beautiful day in the neighborhood. In fact, it's the best day I've had up here, except I still have a river running through my house.
Yeah, no kidding. We know you are struggling with some infrastructure problems over there, so we hope that all got solved. It is a gorgeous day here as we actually record this on Sunday, the day before here in Dallas. I mean, I'm in flip-flops and shorts. I got the windows open. It's awesome. So we hope you guys had a great weekend. We hope you're fighting off some of those Monday scaries, and we hope to bring you a great show. We appreciate you guys sticking with us. As our loyal fans, Stu has a great show lined up for us today, guys. First article we're going to cover is Forget Peak Oil Demand, a thirst for barrels puts $100 in view. So this will be an interesting article on sort of the bull case for oil and gas. We'll see if I agree with it after Stu gives us an overview. Next, Chevron Boost annual share buybacks and hikes U.S. spending, kind of highlighting the fact that, you know, we've seen these companies are out there and really pushing share buybacks. And again, I think that the reasons for that are mixed. We'll cover what this article talks about next. This is an opinion article. BP's rolls back climate ambitions, which actually sends their stock climbing higher. So Stu will dive in what BP's sort of pivot back into oil and gas means for them and the overall markets. Next, Russia is set to mothball damaged Nord Stream gas pipelines. Who would have thought, you know, after some random guy on Substack told us that the U.S. destroyed it, which is probably true. Looks like Russia is set to mothball and doesn't want to get turned back online. So Stu will cover what that means next. Subsea Seven, Cem offshore, and Kongsberg, which are three floating offshore wind terminals. They will take aim at a new floating offshore wind development. The real question is, will this have an impact on the marine life? Stu will cover what that means. And then finally, power shortages are coming soon to America. And as Stu likes to say, quote, a balanced power of diet could stop the crisis. Stu will cover the electrical markets. He'll then kick it over to me. I mean, it's really a great day on Friday for the markets. We saw green all around. Oil peaked and is currently sitting about 79.85. It'll be interesting to see what happens as you guys listen to this Monday morning. We did see our first $3 natural gas spike, which is good to see just for the long-term bullishness. Nat Gas Intel claims we've got some new signs of demand, but I will cover all of that and a bag of chips, guys, and then we'll let you get out of here. But first, check us out online at the world's greatest website, EnergyNewsbeat.com, dashboard.EnergyNewsbeat.com, the best place for all your data and oil and gas and energy news. Hit out the description below. You can find all of the articles that are courtesy of our website in the description below. We've spent a great deal of time making sure that that description has everything you need to be able to click and find out what we're talking about while you listen. So we appreciate our team who keeps that up to date. I am out of breath, though, Stu. Where do you want to begin?
Okay. Hey, let's go ahead and start with the one that I'm a little confused on, as far as everybody is jumping up and down and saying China's demand is going to change the world. Well, this article is Forget Peak Oil Demand. A thirst for barrels puts $100 a barrel in view. Now, remember, that's Brent, not WTI. And so, Michael, I think that it's really the demand is going to be there. But Amin Nasser, CEO of Saudi Aramco, says the demand from China is very strong. But I don't think it's going to drive it to the $100. I think I like the way that he is positioning this. My view, shorthand, is maybe people are underestimating demand, is overestimating U.S. production. Chief economist at Trader Trafigura Group said.
Trafigura.
Thank you. Bless you. And I don't know. What are your thoughts?
Oh, but yes, it's Trafigura is one of the largest like physical oil and metals traders in the world. There's a great book called "The World Is for Sale"
Right.
by Javier Baez and Jack Farchi. Great book which covers the history of Rich and Co, Trafigura, Vitol, all of the big oil and metal traders. So it is kind of funny though. You know, they got this chief economist at Trafigura. In my view, shorthand is maybe people are underestimating demand and overestimating U.S. production. Bro, you get paid to be bullish. Your literal job is to convince the world that we should buy more oil and that they should buy it from you. So exactly. I'm going to take anything that the Saeed Rahim, I'm sure he's brilliant, but he's literally is paid to be bullish. So it's a backhanded way of saying, yes, he's probably going to see that. I mean, on the Brent side, here's this. You can make an argument for both. I think there's a set of facts that when you look at them, you can come to the conclusion of, oh, wow, yeah, we probably are underestimating what China's demand is going to do once they come back and start really ramping up their needs. What's that going to do? And I think they point out specifically the U.S. production. That's a very valid point. And when we've seen this, there are all sorts of studies that you can go find. And we'll link a couple in the descriptions below and I'll send them to our team so they can make sure they link it, showing that outside of the Permian Basin, overall oil and gas production has declined. New oil and gas wells are coming on not as productive as they used to. Right. We're running out of really, really good tier 1 acreage. Where is the growth going to come from in the U.S. market to keep up with what will be, regardless of where you fall on the bullish versus bear side, we do know demand will grow. The question is how much. And if China accounts for more than we expect and we see a higher demand spike than we expect, things could get tight. I tend to agree with the facts on the other side that say things are pretty balanced right now and already at a pretty inflated level. I mean, as we sit now, WTI is $79, basically $80. Brent is at 86.74.
Right.
Is there $14 on Brent room to run north? Is there that much excess demand? Is there that much sentiment on the demand side coming from China? I don't know. And I do know that there are lots of oil projects coming online in the Gulf of Mexico. Think about it. $100 oil is a huge, huge spurn for these large integrated oil companies. They go out and really where the needle moves is that Gulf of Mexico production. But you have to think about it. These are 6-month projects. So you turn a well, you go start drilling a pad in Gulf of Mexico in July of 2021 or 2022, when that project gets greenlit at $110 oil. You're not seeing production on that for 6 months, 8 months because of the entire you're probably just starting to flow back some of these bad boys and just now starting to realize and see some of that real uptick in production. So I'm a little bit mixed on this analysis. I mean, obviously Trafigura is going to agree and going to say, bull. I mean, I would do the same thing if you were paying me as much money as this guy's getting paid.
Yeah, pay us. Let's find out.
I'm cheap.
Yeah, we are cheap, but better looking, I bet. Hey, well, maybe. I haven't looked in the mirror lately. Hey, one of the things though that really concerns me, my hesitancy to put a number on China is out there right now. And saying, hey, it's going to impact us this much. OPEC just came out and said that they're really not sure. There are over 30 tankers a month right now that are going to the dark and the gray fleets. So that is something that OPEC and that everyone else is really not considering is Russian and Iranian and Venezuela inputs to China and India. Everybody's saying those demands are going up. How much oil is going to be supplied by the dark fleet? That to me tells me that OPEC is more afraid of that in trying to figure out pricing. I have no clue on how to figure out the pricing anymore, but that dark fleet is going to be substantial.
I'm not surprised that you gravitate towards the dark fleet.
Yeah, me and Luke Skywalker, we know how to find that dark side. Okay, here we
What's
go.
next?
Okay, let's go to Chevron. The Chevron Boost an annual share buyback hikes U.S. spending. I really want your opinion on this one, Michael, because I really applaud Chevron. They did not, and that goes hand in hand with our BP article here right up after this. The title, and on Tuesday raised its share buyback program and reaffirmed its production guidance of more than 3% annual growth by 2027. Yeesh. 17% to 17.5 billion a year.
Whew. I mean, that's more than a lot of companies make. That's what they're doing, buying back their own stock. Here's wow. Here's my, I would say, thoughts on what. And again, there's probably multifaceted reasons they're doing this. One reason companies just buy back stock in general is it's the easiest way to inflate's not the right word, but what it is, inflate the price of your stock. As the supply of your stock goes down because you are now currently buying it, the overall value of that stock inherently is going to rise slightly because that supply is much lower. So that's partially why you see share buybacks, and specifically when you feel like your stock is undervalued at a company, which Chevron probably does. It probably does forecast internally much higher levels of oil prices, which is going to significantly raise their valuation, and they feel like buying their shares now specifically is probably a good deal. Now, on the other hand, you could say, well, Michael, it's a $75 million share buyback program that's just mapped out per year. So they're forecasting oil prices 4 years now? No, not really. So yes, there is a little bit of, hey, we're just committing to buying shares in order to build value for our shareholders. But I think some of it has to, 17 billion in the first year is a lot. That's more than most of the other companies that we've talked about. I remember all the companies that we talked about outside of ConocoPhillips who, remember, buried their share buyback program in bullet point number, half of sentence 2 in bullet point number 3 on their share. So they kind of took a different approach of all these other companies. This is a much larger move for Chevron. I think it's interesting. They have enough liquidity right now to be able to do all of this. They can kind of have their cake and eat it too. They can do the share buybacks. They can still increase their U.S. spending where they have some, really good tier 1 Permian acreage that they can go out and continue to drill up without, and continue to see the productivity levels that sustain continual investment. I think they've done a good job over the last 3 years of trimming their fat. They're really probably one of the better run. I think them and Exxon clearly are 2 of the better run oil majors. I do like ConocoPhillips from a standpoint. The moves that these big oil companies are making, I think they're making all the right moves. You're seeing them dive not specifically into renewables, but stick with their oil and gas. Think about it. The only super major right now that's really seems to be having issues is what we'll cover in this next article, BP. They're the only one that really dove headfirst into ESG. Them and Shell are 2 companies pulling back right now. Think about who the only 2 companies were that dove headfirst into, we're going to become a wind farm company.
And well, there's another one that goes into that same thing. We'll go in that next one. You ready to go to the next one?
Yeah, we might as well.
Okay. Next article, dude. This is pretty funny. This is an opinion piece, and BP's Beyond Petroleum rolls back climate emissions. It sends a different kind of message, Michael. Now, we've been talking about this for several weeks now, but I like this one because it really fit in with our other stories as well, too. BP drank the Kool-Aid. If they were in, was it, where was the thing where everybody was drinking the Kool-Aid and got killed?
It was down in Cuba. It was Jim Jones.
Jim Jones in Jamestown or whatever.
Yes, Jamestown.
Yeah. So anyway, they all drank the religion there. And here's what the problem is. They went, Chevron stayed the course. They were the poster child of, really holding on tight. Then you take a look at, it's the French Total Energy. That's an Oklahoma way to talk.
Total, it's a total.
Give me a total. Man, I can't handle it. I'm just, both of our fans just threw up. But when we sit back and take, Total is now actually increasing their drilling programs. They're going, well, if BP can do it, we can do it as well too. They just announced an increase in their drilling. Shell is doing the same thing. They are now rolling back. And this goes back to when you and I were talking a little while ago about the CEOs in front of Congress, and they stood up to Congress. Go US big oil CEOs. I'm proud of them. Okay.
Well, I think there's a really important quote at the bottom of this, and I'd recommend reading this whole article again. You can click the description and see and check this article out. One of the final sentences: the big oil companies figured this out years ago and generally avoid tech-based climate solutions. Why? Because they know how to drill for oil and gas. You start getting into these other business models, it's tough. I mean, I just listened to a podcast with the former CEO of IBM, Gina,
Right.
what's her last name? Rafferty or whatever. She was the CEO of IBM from 2012 to 2020, a period where they had to completely shift their business model from physical infrastructure to now cloud-based. It's not easy. It's not hard.
No.
And one of the few reasons a company's able to do that is slow change and progress and all this stuff. It doesn't happen overnight. BP decided 2 years ago they want to be a wind farm company. You want to be a wind farm company? Cool. It's going to take multiple decades in order to completely roll out and really rebuild a business. I mean, because they're two different business models. Not to get on a total side rant here, but there used to, 3-4 years ago, and right when I was getting into grad school, one of the projects they had me work on was, we need to try to build education programs to take people who work in oil and gas and train them to work in renewables. And what you realize real quickly is there's no transferable skills. The only skills that are transferable are transferable to all other industries: project management experience, understanding how to hit deadlines, budgeting. But that goes to any deal, not just what a wind farm looks like. Everything else about understanding and building, exclusive, like an offshore wind development, has very little to do with it. You need a structural engineer out there. Petroleum engineer is designing how an offshore wind should shoot. We're not qualified for that. So rant. The idea that you can just pivot your whole, we've got smart people here, we're going to teach them to do an offshore wind farm, is ludicrous.
Yes. No, that would be hideous. But, hats off to the U.S. Big oil. All right, let's go to the next one here. Nice rant, dude. I liked it. Okay. Russia set to mothball damaged Nord Stream gas pipelines. Michael, as we've talked about this, Nord Stream 1 and Nord Stream 2 are actually 4 pipelines that run from Russia to Germany through the Baltic Sea. Three of the 4 were damaged. Arthritis gets me, so for our podcast listeners, I had to hold one of my fingers down. So 3 of the pipelines have been destroyed. 1 still works, and so what they could do is still sell some. And 50% would be better than nothing as far as Germany is concerned. But that's another play for Putin to shut it down. That's the significance of this. And I truly think that it was going to happen anyway. So I just thought there was a not explanation in there that there was still 1 working pipeline. So
so give me an idea. It says, so one of the quotes is here: Gazprom has said it is technically possible to repair the ruptured lines, but 2 sources familiar with the plan said Moscow saw little prospect of relations with the West improving enough in the foreseeable future for the pipelines to be needed. So you got to help me out here. It's 110 BCF per day that can be swiped through these lines. That's a lot of money that Russia's missing out on.
Nope. Yes, it is.
So why is Russia cool with 3 of these pipelines being off? They're losing 75% of the revenue they could be making, right?
Here's where Qatar and China just signed a 27-year contract with China. Guess what China and Russia are signing? 27, 30-year natural gas pipelines. Why would Putin want to do anything because he's going to tack on pipelines instead of coming down out of through the Ukraine and everything else. They're going to roll them right on through, and he's getting gas to China. So
I see. So he's taking a short-term hit to build out a long-term infrastructure elsewhere and find new actual long-term buyers.
Absolutely. And so he is actually playing it smart. China, with that long-term contract that's coming up, that's why the EU got into a situation, Michael. They did not do long-term contracts with Russia.
Yep.
This whole thing would have been avoided with long-term contracts. So with these long-term contracts, China will be supplying Russia with arms and ammunition and weapons. And then Putin is going to get them all the natural gas they can do. So why would he want to mess with the West? There's no
Good
reason.
point. It's a good point.
So anyway, there's a little subheading in there, if you would, that was not explained in the article, but that's why you pay me the medium bucks.
Yeah.
Okay.
What's next?
Here we are. Michael, the article is Subsea Seven and Cem offshore and Kongsberg take aim at floating offshore wind. Will this impact more whale deaths? In the article, we are losing a lot of whales around the world. And for our podcast listeners, take a look in the show notes. I have the link here, but look at the story. Look at the way all those lines, even though they say they're floating wind farms, those things are all tethered to the ground. The vibrations are going nuts, and it's it's killing the whales through all this mess. So think if there's thousands of windmills, then you have all the cables, you have all this mess. It's going to be killing some serious whales. And I find it all disturbing that there's hypocrisy and nobody's even following along with it. So
yeah, I mean this member of understanding that they've signed to jointly look at the optimism of marine operations for floating wind products. I mean, this is a industry funded study. I mean, I doubt they'll come to any real conclusions other than, oh yeah, our offshore wind farm is great. It's not going to kill any whales.
Well, Free Willy is now dead on the beach. They can't even free him now.
Revive Willie. That's the new Revive Willie, baby.
Yeah. For my podcast listeners, I'm holding up two mice.
What do you got next, Stu?
It's a defibrillator. Okay. Next one. Power shortages coming too soon to America. A balanced diet of power could stop the crisis. The subheading on this one, Michael, is all of this makes Americans more dependent on the electric grid at a time when utilities are accelerating the closure of coal and gas-fired plants, leaving the grid increasingly reliant on intermittent wind and solar. This has sparked warnings from utility infrastructure experts that America's dash to renewables could be driving our own electric grid to instability. Stockland writes, this is critical. Finally, they're all of the balancing authorities, as Meredith England says, about shorten the grid. The author there, she's brilliant. And when she was saying on this, the balancing authorities are having to be really, really critical on this. This key point in here. The analysis shows that 40 gigawatts of existing power generation is at risk of retirement by 2030, accounting for 21% of its current installed capacity, meaning 290 gigawatts worth of new power supply is seeking to connect from PJM's grid. It's the expense, stupid, and it's the consumers that get to pay for all this, and the price for energy is just going to go through the roof. We cannot retire coal, we cannot retire natural gas until the technology and the physics align. But people are just stupid. I said it. Sorry.
Tell us how you really feel. No, I agree. I think that the fact that, we don't have a clear outlook on where our, if we don't have a clear energy outlook, the last thing we should be doing is retiring reliable fuels and switching to unreliable fuels. But that's unfortunately an issue that we're going to have to deal with for years to come.
Exactly. I'm going to see if I can get on my trainer, the training wheels on the back of it. I'm going to have an electrical thing so I could be like a squirrel on there and try to generate my own house. Hey, anyway,
you are ESG.
Oh, I am. Yeah.
You got anything else?
Nah, I'm good, baby. I had a good roll. Thanks for your input.
Yeah. Just trying to keep our views up. I think looking at how finance looks, we had a really good day on Friday. Markets were up about 1.6 percentage points in the S&P 500, 2.04 percentage points here on the NASDAQ. Crude oil and natural gas both saw about 1.5% gains. Crude oil currently sitting at $79.85, natural gas $3.01. With some colder weather looking like it's moving in, the prospects of some exports on the natural gas side, specifically out of Freeport, have sort of buoyed natural gas prices in the short term. It'll be interesting to see on the long term how things go, and if we can stay above that $3 mark, or as we move forward, if we do see a dip back down to $2. Crude oil, as we mentioned in our opening segment, does have some bullish tendencies on the back end. Do I think that we're going to see $100 Brent, which is sitting at 86.74? Probably not. What does that mean for WTI? I think 85 is probably your max and that's enough to pay bills. Trust me, people, that is enough and should be enough to pay the bills at every company and twice on Sunday. So let's not be confused about 79, 80, $85 oil. That is really good. And if you can't balance your books with those type of numbers, watch out. Now, again, it's going to be interesting to see how service companies continue to react to this pricing. Do they keep $100 oil pricing, or do they come back down and give us a little bit of a break? So it's going to be interesting to see how things played out. I think we're rolling out of earnings season, which is really the last good earnings, not good earnings we'll see, but it's going to be interesting to see this Q1 earnings report that's going to be rolling around here in about a month and a half. It's not, the outlook's going to be good. It won't be maybe as great as Q4 was, which was specifically looking at that rollback when we did see a nice $100 oil. So I think we'll be looking at that. There are a lot of whispers around the M&A space that are continuing to pick up. I think it'll be interesting to see, obviously Pioneer name was floated around last week. It'll be interesting to see. Obviously they're in the market for something. The question is, who is it? And is there another player in the market sniffing out something? I wouldn't be surprised if we did see a company like ConocoPhillips on the super major start sniffing around. They've already gone out and bought Concho. Is there something else around the Permian Basin that they can swoop up and consolidate? I don't know. PE has obviously made some moves. We saw Bison Oil and Gas about a week and a half ago come up with their fourth fund specifically focused in Colorado. We saw the Double Eagle guys announce or Double Eagle 5 rolled out about 3-4 weeks ago. So it's going to be extremely interesting to see how the private equity market moves forward. I know there's a lot of activity being talked about, and we will make sure to be the first place to cover all of that here on this podcast. Stu, I don't think I got anything else for these people. We got to probably let them get back to work on a Monday, unfortunately.
Oh, no, they want to hang with us because it's more fun than going to the, work. So
it's a good point. So we can sit here and talk about Stu's Civil War experience another time, though. But I think we need to get out of here, let you guys get back to work. Hopefully you don't have too many meetings. But agreed. Thanks for checking us out, guys. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow.